because a situation like that would save you so much money in taxes. Okay. And it's just a simple process. Open up an LLC, get an EIN, open up a business bank account, turn your business into an S-Corp, right? And once your business is an S-Corp, then you have to pay yourself a W-2 income and then take the rest of the money as a distribution, which it can be distribution is basically the same thing as a dividend. Hello everyone, my name is Kaseem. Welcome to the $1 Million Challenge. So in today's video, we're going to talk about something a little bit different. Okay. And I've been thinking about this, right? A lot of people nowadays are working as a 1099 self-employed person, including myself. Okay. And for myself, it works well for me to work as a 1099. But now that I start up an entity and going about doing all those things, I'm about to convert those 1099 income into an LLC and get paid through an S-Corp. So in today's video, we are going to talk about 1099, basically converting a 1099 into a company. Okay, relatively simple. And the reason why I'm going to touch upon this today in today's video is because I'm considering doing something similar for myself. So I figure, hey, let me just do a video about it, put it out there into the world, and hopefully you don't know who this video will be able to help on your way to financial freedom, financial independence, solving your money problems, So yeah, let's get right into the video. So the very first thing that we have to do when you are trying to convert your 1099 income, you're trying to convert that into a business income like an LLC, the very first thing that you need to do is to open up an LLC. You have to start up an entity, instead of just working without an entity. Okay. So start up an entity like an LLC. Is a limited liability company. Your assets are a little bit better protected if you're working under an LLC as compared to working without an LLC, because it depends on what you're doing as a 1099 person. You might have a lot of liability, you might have very little liability. So if you're in a situation where your job, you're taking on a lot of risk, meaning the chances of you being sued is relatively high, then you're better off turning that 1099, turning it into an LLC. Okay. So the first thing is to start up an LLC. I did a video on it. You can go check out that video. I recommend that video. It's very, very detailed on how to open up an LLC and also how to get the next thing. So the number 2 thing that you need next is you need an EIN. An EIN number is like your social security number for the business, or for international, like your NI for the business. You need an EIN, and you get that directly from the IRS. You don't have to pay anybody to do that. You need to get an EIN, and you get that directly from the IRS website. I did both of that in the video that the video that you're gonna see right here. I talked about both of those things, so go check that video out. It's very, very insightful. So that's the number 2 thing that you need to do. The first thing is to open up an LLC. The second thing is to open up an EIN. You should get an EIN for your LLC. And the third thing that you would need, the third thing that you need to do is to open up a business bank account. Okay, so you can separate your income from your personal. You open up a business bank account, and when you open up a business bank account, what you can then do is you can have your 1099 income go into your business bank account. So you're going to change all your details from the 1099 place that you used to work at. So let's say you work as a freelance landscaper, right? I mean, if you're doing landscaping, you probably have a company. Let's say if you're working as a freelance video editor, for example, you're editing people's video online, you do everything online. It would be better to have your income wherever your income is coming from, you have it go into your business banking account, okay? Because now you're doing business online, you have it go into your business banking account, okay? So by you having your money go into a business banking account, it's better. It shows that, okay, you're trying to build something for the business and everything like that. So after that, the fourth thing that you're going to need to do is to make your business an S corporation. Okay, I'm going to put the definition of an S Corp right here. Make your business an S Corp, so that way you split your income into two to benefit you. Okay, this benefits you when you have an S Corp. It benefits you in such a way that you can split your income into two. Now, based on your tax bracket, you can pay yourself, you know, an average amount of money that you pay someone else to do what you're doing. So that way, that income will be taxed at the regular tax rate for a W-2 employee, and then you can now take the other half of the income as a distribution, okay? Dividend distribution. And those are taxed differently. Let me show you guys an example of what I'm talking about. The point that I'm trying to make to you is that when you have your business as an S Corp, okay, you take your 1099, you say, okay, I'm not doing 1099 anymore. I want to make all my income, I want to make it into a business income. I edit video for people online, okay? That's my business. So you create a business, you get all that stuff set up, all the process that we've talked about. And now we get into the meat and potato. The reason why we're doing what we're doing now is that it lowers your tax liability. For example, if let's say while you're working for people on Fiverr or something like that, and like let's say you make $100,000 a year, okay? Or let's say, yeah, you make $100,000 a year. Let's say you take that income as a 1099 income. Now you're going to be subject to 22% tax, right? And that's even on the lower scale. Sometimes it can go even up to 30%, depending on what you put. If you put in one, if you're claiming one as an individual, or if you're claiming a family, right? It's gonna be that percentage. Now, let's say for a video editor, right, you make $100,000 a year, and all that money comes into your business bank account. This is the great thing about this strategy that I'm talking about right here. You can take, let's say, $25,000 to $30,000 out of that money, right? So let's say out of the whole $100,000, you can say, you know, an average, because when you have an S Corp, right? When you have an S Corp, you have to pay yourself a W-2 salary. Have to. And then also you can, they make it optional, but you can take a distribution as a dividend for the rest of your income, right? The most important thing is just tax, the way they tax. You make $100,000. Let's say if you were to be taxed on the whole $100,000 as a W-2, then, you know, you'd be paying a huge 22, 23, you know, $30,000 in income tax on that money. But if you have a business and you have an S Corp set up, then you can split that money into two. So let's say an average person, you can say, hey, you know, Uncle Sam, an average person online that edit video for people make an average of, you know, $20,000 a year or $30,000 a year, right? And then what you now do is you only get a W-2 income on that $30,000. Now you're going to be left with $70,000. And this is the sweet part. This is the sweet part of today's video. Let me pull it up right now, okay? Now, this is the sweetest part of today's video, okay? Because now, let's say you make $100, the example that we were talking about just now. Now you have $70,000 that is untaxed, right? Now you look at the dividend distribution section of the tax bracket of the tax code, right? The $70,000 that is untaxed, you can take that, right? You can take that as a distribution, okay? And it now, depending on your marital status, that will determine how much you pay in taxes, right? And this is the dividend tax rate for tax year 2022 that we're in right now, okay? So the tax rate, you pay 0% if you're single on the first $41,000 of dividend income. If you're single, so that means, let's say you make $70,000, right? You have the $70,000 that is left out of your 100K income for the year. Well, you can decide to take $40,000. You can decide to take this exact amount of money if you're single, and then you don't pay income tax on that money. And on top of everything, as a business, you can give yourself a 401k and take the rest of that money as 401k distribution. You can pay yourself healthcare and be able to deduct those as an expense to your business. Okay, so it's even better when you're married, right? When you're married, you're able to take $83,000, almost $84,000 in non-taxable dividend income. Okay, this is where the strategy that I'm talking to you about, this is where it comes to life. Okay, open up an LLC. It's almost free in some states. It don't take too. It's like $60 a year to maintain it. To open up an EIN number is basically free. You know, business bank account, most of them is free, if not $10 a month. To turn into an S-Corp, I haven't looked into that yet, but it's relatively cheap as well. Maybe $6 or $70. To pay yourself a W-2, you can have that set up on QuickBooks. How much is that going to be? $10. So maybe all this stuff is going to cost like $500 to $600 a year. But then you can be taking this huge tax deduction. This is huge if you're married. Can you imagine making $83,000 in dividend income and not paying tax? You pay 0% tax rate on any income. If you're single, $41,000. If you're married, $82,000. You pay 0% tax rate on $82,000. Let it sink in, okay? This is why I decided to do this video today, because this strategy is something that I'm looking to implement for myself and for my family. This is a great thing. This is a great thing. It's in the tax code. We all are able to, take advantage of this. So I hope you watch a video that I did about creating value and how all these videos kind of work together. Like if you watch that video, you're going to notice I said something about creating value, doing things to create value. Now, you can think the process of you going through all these things is not creating value, but it is, right? Because when you have to file all this paperwork and do all these things, you have to pay either to the government or you pay an individual to help you do all these things. You're creating economic value, okay? That's why you're able to have all this massive tax write-offs. Massive tax benefits with a tax rate this sweet. If you're an individual and you're making $80,000, $90,000, $100,000 and you're paying, W-2 money, you're paying W-2 income on all those things, figure out ways. Maybe you can talk to your employee, be like, hey, look, I started a business, I work for myself. Instead of using my own name, can I use my business name? Can you just pay me in my business account? And then you just decide to pay yourself. So that way your employees don't have to worry about paying your tax. They don't have to worry about paying your benefit. They just pay you all the money. You never know. There's no harm in asking if it's something you can do. You never know. Maybe it's something you can do, because a situation like that would save you so much money in taxes. Okay. And it's just a simple process. Open up an LLC, get an EIN, open up a business bank account, turn your business into an S-Corp, right? And once your business is an S-Corp, then you have to pay yourself a W-2 income and then take the rest of the money as a distribution, which it can be distribution is basically the same thing as a dividend, you know. So that is just my 2 cents that I want to put out there in today's video. If you find value in this video, consider subscribing to the channel. I do stuff like this where I bring, you know, uncommon ideas. I bring it to the world of the finance community on YouTube. And if you appreciate it, please subscribe. Thank you very much. Until next time, see you later. Love you all. Bye.